Good morning, everyone here in WA, and good afternoon on the East Coast. It is our pleasure here at NWR Communications to be hosting this Metgasco webinar. Joining us today is Ken Aitken, the Managing Director of Metgasco, who's going to run us through a overview presentation for about 20 minutes, and then we're going to have a Q&A session. If you wish to ask a question, there is a Q&A function on Zoom, so just type and I will ask them at the end of the formal presentation. It's a very exciting time for Metgasco as they look forward to not one but two fields coming into production in 2023, producing gas for what it remains a very bullish gas market over in the east. So I'm sure Ken is excited to tell us all about it, and I will pass over to you now, Ken, and we'll follow up with Q&A at the end.
Thanks, Aidan, and welcome everybody to Metgasco's December webinar. As you can see from the slide here, we're presenting the 25th of November corporate presentation. So after a sound year of progress in our Cooper Basin assets, I'm proud to report that Metgasco are extremely close to delivering a new gas source, Valley, in January into the eastern states at a time of record gas prices. And also, of course, providing maiden cash flow to the business, which is a major milestone for a small cap company like Metgasco. Yeah, so the second slide was just a disclaimer. Please read that at your leisure. This slide is basically the highlights of our two gas fields entering production, and summarizes the overall business in one slide. So if there's one slide everybody remembers from today's presentation, it should be this one. But this slide essentially summarizes the key message, and our current share price values the company at about $0.67 a gigajoule, which is significantly below industry metrics for discovered gas reserves and resources, which we have. I firmly believe that the two East Coast fields that we have, Odin and Valley, starting production in calendar year 23, will be the catalyst for a re-rate of our share price and business value. And just as an aside to that, Blue Ocean Equity have finalized a research note on Metgasco just today, and will be posted on our LinkedIn and company website early next week. And basically the summary of that research note is that Metgasco are a speculative buy with a target price of 4.5 cents. So the company snapshot, I'm not going to dwell on this slide. Shareholders will know that the details on this slide. I think we were, as I've looked this morning, just about 1.9 cents when we put this slide pack together. We're 2 cents market cap at 2 cents is 22 million. Next slide. So what is really interesting is, and there's really a big opportunity for us, as the current East Coast being hugely undersupplied in gas. And you can see here the ACCC graph showing the domestic supply dropping as the offshore fields in the Gippsland Basin come off production. So the demand is higher than supply, and there's a 56 petajoule shortfall in 2023 is predicted. So really, it's a perfect storm of events, which includes the war in Ukraine, some legislation that doesn't give the eastern states any domestic reservation, and the push to renewables, which, when the sun doesn't shine and the wind doesn't blow, will allow gas to be a transition fuel, in our view, for decades to come. So the gas market outlook looks good for Metgasco and other gas producers and the joint venture in general. And the Valley and Odin's production will be highly valuable for many years to come. So there has been some recent government intervention into the markets, and I'll talk about that in the question and answer session at the end of the presentation. This slide just shows the fact that the East Coast gas price is linked to LNG, and with the war in Ukraine, the gas price is rising as the LNG netback prevailing prices rise as well. Next slide. So Metgasco has uncontracted gas reserves. We've got a significant amount, and you can see the two donut charts showing that. We signed a gas contract earlier this year with AGL. That only takes 16% of the Valley Field 2P gas reserves. So that leaves 85 petajoules of gross reserve remaining to be contracted into the future. The contract we signed was for 4.5 years, and you can see in the slide that we did get a prepayment. So there is a couple of different levels of gas price that are in that contract, and one is the prepayment price, and then a slightly higher price. Odin has 36 BCF of 2C contingent resources, and all of that gas, it remains to be contracted. We're just going through some ACCC approvals to allow us to joint market, and we expect to market that gas into this exceedingly hungry market in the eastern states in the first quarter of next year. So this slide covers really the background of the Valley farm out, in particular, to production in less than 4 years. Now, we've drilled 4 out of 4 successful gas wells. Now, we're as a technical team and as an engineer working closely with explorationists over the years, this is a very proud event for the company. We got a free well. The Valley 1 well was drilled because of that farm out. And then looking down at the Odin timeline there, we strategically purchased Beach's 15% this last year, which has allowed us to go and have 25% interest, to align the interests across the 2 pyramids, which makes it much easier to bring this commercially, this field into production. And also in the last couple of months, the joint venture has taken the decision to fast track Odin, taking advantage, hopefully, of these good winter gas prices, which we'll see in the next eastern states winter. And so that was a no-brainer to do that. And that's effectively putting a short pipeline into the Valley pipeline facilities from Odin. And then a stage 2 is putting a longer pipeline, but it's essentially bringing gas on within 6 or 7 months of starting or finishing the engineering work, which is a great result. Next slide. So this slide just really looks at the Valley and Odin production upside. The ATP 2021, the picture on the right-hand side shows a lot of what I call a string of pearls, additional upside of exploration opportunities in ATP 2021 in particular. We're putting the pipeline in, and our goal here is to keep that pipeline full of gas for the next couple of decades or more. And you can see the pipeline goes all the way, it goes due west from the Valley field, close to Odin 1, and then down to the southwest, down to the Beckler field, and then it gets pushed through, as you can see on the picture on the left-hand side, through the Santos's Moomba processing facilities. So the prospects and leads in ATP 2021 will be further sort of known by shooting a 3D seismic program across the top of the ATP 2021 block. And that work will be done in the second half of next year, which will allow drilling in early calendar year 24. So what the reserve and resources we have is just the tip of the iceberg. We believe there's more to come, both in gas and shallow oil-rich Jurassic oil reservoirs as well. This slide just focuses on the Valley gas field. Where you can see the pictures there. These were back in November. We've trenched the lines. We're putting the lines all the way back into Beckler, and we're just finishing the hydro testing as we speak. On the right-hand side is the manifolds, which will sit around the Valley 1 Christmas tree and allow us to start that up in the second half of January. There has been a couple of delays, and we've had some weather delays, and we've had some COVID-19 delivery delays. We believe that the project is now de-risked, and we're very confident we'll be coming in to production in the second half of January. So this slide just looks at the sort of geology of the 4 wells. So Valley has dual well completions, and they're designed to flow the stimulated Pachawara and conventional Talachi, either separately or together. When all 3 wells, based on the Valley 1 test, which has had a 4 or 5 day test, and from the Pachawara, we're anticipating around 12 million standard cubic feet a day from the 3 wells. It may be more, and we obviously have to bring these wells on to be sure exactly how much is going to flow. Gas production from Valley, as I said, Valley 1 is anticipated in late January, and then Valley 2 and Valley 3 would be brought online in February, and hopefully up to the full capacity gas rate in early March. I'm just looking a little bit more closely in Odin. You can see the picture of the layout of the Odin facility. I mentioned it's really been done in 2 sections. The first phase of the project is putting in the pipeline, the 1.4 kilometer pipeline to accelerate the production. We own that pipeline, and that'll go in, and we're renting other equipment that will allow us to start it really up as an appraisal test. In the meantime, we'll order the long lead items for putting the 7 kilometer pipeline going back to Valley. So the gas production from Valley can use all of the facilities such as evaporative ponds, coolers, separators, etc. at the Valley field. So that's the 2 phases of the production. And as I said, we're hoping, we're certainly targeting production by mid-year, and that is very achievable. And we're actually expecting the 1.4 kilometer pipeline to be ordered to be installed immediately after the Valley project pipeline hydro testing is complete. So expect that in January. So the final slide is really summarizing the 12 months of business catalysts going forward. The top 2 have already achieved. The Valley pipeline and facilities installation is ongoing. It's going to plan. We've not had any further rain delays. The weather has been really good. Work is progressing extremely well. So we are targeting Valley first production in the second half of January, as I said. After the crew come back, they're taking the installation crew are taking a break over Christmas and New Year and coming back to finalize all the different work to button it up and start production. We've also got Odin project milestones, including the sort of phase 1 and 2 feed, and also the moving of the marketing of the gas and moving the contingent resource into reserves, which we've got all of the ingredients for an independent auditor to provide that. And finally, production revenue is a big moment for Metgasco, and it also allows us, I guess, a red carpet treatment. We're now a producer, a revenue generator. We have been a partner of choice. We're seeing that we're being invited into other data rooms and have been recently, and will continue to, as the bigger companies decide that there may be better profits offshore. We'll focus on the onshore side. We've got this reputation of being a partner of choice. We want to expand our footprint where it makes sense, and obviously fund anything through our from our current production that will be up and running in calendar year 23. So with that, I will hand back to Aidan for the question and answer session.
Thank you, Ken, for that run through. Yeah, we've received a lot of questions by email before the call and starting to come through on chat. So if you have any additional questions, just use that Q&A function that we have there on Zoom. Just trying to sort of be concise. Quite a few questions around the East Coast gas market. Ken, obviously well publicized how bullish it is for producers and less so for consumers. But how does the price cap impact Valley and Odin? Seems to be a topic people want you to answer.
Yeah, so there are two parts to the legislation papers that were announced on the 9th of December by the federal government. The headline one, which has been in all the news feeds, a cap of $12 a gigajoule for new gas contracts signed in the next 12 months for fields already in production. And that is expected to be approved in Parliament today. And also there's draft legislation recommending a mandatory code of conduct introduced by the government to create a reasonable pricing mechanism which remains open for consultation until February 2023. And this sort of includes a reasonable pricing obligations linked to the marginal cost of supply into the domestic market. So in summary, both Valley and Odin are not affected by part one of the legislation because we're not in production. So that's good news. And we do need to understand the government's intentions of part two of the legislation, which the industry gets a chance to comment on by February. But we believe Odin, because it's a very low cost development compared to some of the bigger offshore fields, and it's got highly robust economics. So if $12 a gigajoule became the floor price for Odin, hopefully we'll get more. But if we don't, that is a hugely economic gas price and is very valuable to us at that price. So yeah, there's a lot of noise on that at the moment. It's certainly not going to affect both our short-term Valley and Odin work, and certainly any investment in future footprint in the Cooper that we might be chasing.
Right, Ken. Thank you, Ken. A few questions just around production capacity, bottlenecks, and flow rates. The 12 terajoule a day flow rate, is that net of CO2 or inclusive? How much goes into the AGL contract versus left over for spot? And what are the plans in terms of pipeline and processing overall capacity going forward? So quite a few questions, but allows you to maybe answer all of them in one go.
Yeah, so we've got two 4-inch pipelines, fiber spar pipelines, and the capacity of these pipelines is 20 million standard cubic feet a day. Now, if you're an engineer and you may think, well, there might be some back pressure limitations going through Beckler, and there could be. So until we start up, there's no potentially flow rate limitations, but there might be back pressure. So we want to, whether it's 15 million or 20 million standard cubic feet a day that we can push through there, our goal is to ensure that as the wells, as they will do, slowly drop off in production, we fill up and make the most of that capacity that's available. So in that respect, the next well that the joint venture is planning will be an Odin 2 well. So we're already chosen a surface location, and in the next few months, sort of making commitments to long leads for that well. And we expect Odin 2 would be drilled in early calendar year 24. Because it takes about at least 9 months to get a hold of the equipment, and we've got to find our way onto a drilling rig schedule as well. So the goal certainly is to continue to drill. Other things like future exploration, I mentioned it in the presentation. We are shooting the seismic in the second half of the year, and the goal there is that we come up with a Kinta 2 type well, unless something else shows up that's much better and bigger, to drill that well and target hopefully 3 zones of Jurassic oil and maybe the 2 zones that we're going to be producing from in Valley and Odin. So that's going to be a really exciting well, Kinta 2. So possibly Odin 2 and Kinta 2 drilled at the same time, but certainly when a rig slot is available in that first half of calendar year 24.
And just on the CO2 on the 12 terajoule a day flow rate, Ken?
Yeah, so we have an average, depending on the zone, we've got somewhere between 18 to 22% inerts, as I like calling them, in that. So when you take the raw gas flow rate, you should take the 20% CO2 that obviously will go through Santos's processing system, and that takes the rates down. So it's not going to be selling to the market, say 15 million standard cubic feet a day when Odin comes online. It will be a sort of take 20% off that 15, and that's the sort of hopefully the gas rate that we'll have in the middle of next year.
Thanks, Ken. I'm going to try to group another two questions together around development risk. Obviously, Valley, for reasons outside your control, has been delayed. Is there further concerns that it may get pushed beyond January? And then, you're fast tracking Odin for the third quarter, I believe. So if it is coming on with Valley, is there a risk that it disrupts the Valley production later in the year?
So I'll answer in two parts. So we believe that we're so far down the line, we're sort of 80, almost 70, 80%, at the end of the project for Valley. The weather's been good. You can never know if bad weather comes in, but with about a month or so to go, we're pretty confident that we'll get Valley 1 first gas going at the end of January. As far as I think the way that we're approaching it, the Odin development, by phasing it, we're utilizing rental equipment rather than equipment that's coming from overseas, which gave us the delays this year on Valley. It's a lesson learned there, and we're focusing on bringing the gas to market because the market badly needs it. So I believe firmly that Valley's de-risked, and first of all, and we'll get these wells in production. And then Odin, because of the way we're approaching it, and we have the pipeline and we're renting all the equipment is situated in Australia, that the chances of a delay beyond sort of the middle of the year for Odin are pretty small. So we'll hopefully be cranking 4 wells by the middle of the year, Aidan.
Right, a few questions around Patriot. One angle was the rationale behind the acquisition. What should investors take away from the move into hydrogen? And the second one is, now that it's been sort of terminated, where are we in terms of the loan payment and recovery of that? And looking forward, is it an area you're still interested in?
Yeah, so renewables limb to the business was something that the board were keen to keen to get into. We are aware of all of the targets that most oil and gas companies have of carbon net zero by 2050, and we're no different. So we saw that the Patriot project was going to be a bit of a hedge on that. We also do have the Santos carbon capture and storage project, which will inject CO2 that we produce in a few years' time, and that project should be approved at the end of the year. But we wanted another, one that we controlled. Patriot didn't work out because we've got high standards on project management and getting things done. But I can say that we've just been recently advised by Patriot that they do intend to pay the loan, which, by the way, is not material to Metgasco, but every dollar counts, and that we should expect that loan repayment by Patriot in towards the end of January. And Metgasco will obviously reserve a right to recover that loan in the time frame. So as far as future renewables, we are keeping our eye out on different right-size projects that will allow us to offset our CO2 production. So it was unfortunate what happened with Patriot, but we did the right thing when we saw delays, and we wanted to preserve our balance sheet.
Right, just a reminder, if there's any additional questions, do put them in the Q&A function. I like this set of questions, Ken, because it assumes you become a gas producer next year and start generating lots of cash flow. There's a number of questions looking beyond that, wanting more. So looking at the existing acreage, what is the potential there in terms of its capacity and for the scale of that hub? And then, what else are you sort of looking at to find the next sort of Valley and Odin opportunity? Are they out there, or was this a bit of a one-off?
No, we believe, this string of pearls concept is the production hub and spoke model will allow us to draw a circle around our PRL 211 ATP 2021 acreage, and as a joint venture, pick the best and biggest targets, build up the reserves beyond the 130 or so gross petajoules of gas, build that up. And if we get it high enough, then there is no reason why we can't think of putting in our own gas plant or getting a third party to put the gas plant in if we build the reserves up. And that will allow us to reduce costs by avoiding the route. We're only fixed for 4.5 years through Santos's processing system. Obviously, AGL's contract is linked to that. So if we have the success that we fully expect in this area, we've learned a lot about the area, the geology, and our joint venture partner operator Vintage is highly experienced in squeezing gas out of the type of reservoirs that we're going to find. Obviously, we're looking to increase our footprint, and if we can build footprint around this production hub, then great. If not, we'll be looking at onshore Cooper and onshore other basins. We drill a well earlier this year in the Perth Basin. It didn't work out. It was drilled at peak oil price and it was dry hole, but we like the Perth Basin and other onshore basins that where we can use our expertise and add value to the business.
Thank you, Ken. Just conscious of time, our half hour is almost up. Do you want to spend a few seconds just wrapping up achievements to date and the outlook for 23?
Yeah, I think calendar year 23 is an absolute pivotal year for Metgasco. We are seriously undervalued, and when you read Gary Marsden's note from Blue Ocean, the coverage that will come, you'll probably see that on Monday. You'll realize that, and my job is to get the value of the company up. We are undervalued. I think we're undervalued because we're not in production yet. So we're working to get the production up. So I think we're de-risked on the project this year, as we've talked about. And it's an exciting time to be in the oil and gas business. And we're also, as I say, got our eye on renewables. We want to build the business to the next level, and to be the first MD to take the company in production. Myself and my team are proud of that, and the board are as well. So we look forward to the continued support of our shareholders, and we look forward to delivering good news into the future. And I'd just like to say to everybody, Merry Christmas and a Happy New Year.
Thank you, Ken. A couple of last questions came through there, but conscious of time, we'll follow up with those that asked it on the Q&A and get those answers to you. So thank you, Ken, for your time today. Very happy to be involved with Metgasco here at NWR Communications. I think our timing's been excellent. 23 looks like it's going to be a transformative year for the company. 2 fields in production, those follow-up opportunities. So we're looking forward to hosting another webinar early in 23 to discuss Valley production and what that means now for the company, and the continual news flow that we expect through the next 12 months. So thank you, Ken, for your time, and it's going to be a fascinating and exciting 12 months ahead.
Great. Thanks, Odin. Thanks, Aidan, I should say.
That's okay. I'll change my name to the field if it comes on production on time, Ken.
Odin and the brain. Thank you. Thanks a lot.
Thank you all for joining.
See you.